Hello everyone, welcome to the Ichimoku.co daily futures market review for the trading day ending Tuesday, November 3rd. Firstly to gold futures and continued selling in this market for today. A very strong black body candle following the very strong build of momentum from the previous day's trading. If you recall, we were looking at the extension of the size of this black body following the market testing up to resistance around the Kijun-sen. Potentially we could have seen strong support coming in through the Ichimoku cloud, but it has failed, and this is one of the rare occasions that we've seen a market just directly move straight through the Ichimoku cloud, and it does suggest that the sellers are very, very strong in this market. Now, we may not see a continuation of this trend to the downside, but we have seen the sellers close with very strong control and show very strong commitment by trading lower. But very often when we see breakouts from below the flat part of the cloud, they can tend to be false breakouts. So we have to be a little bit more cautious with this trading activity down below the Ichimoku cloud. What we want to see here is some very strong follow through to confirm, and so that means another strong bear candle down below here. At the moment in the news session, the market is rallying and is potentially going to find some support around the bottom of the resistance around the bottom of the Ichimoku cloud, about the 1121 region. If we do see the market be rejected from there and the selling then continue, we do have some very strong support down below this area around the 1100 region, extending down to about 1097. So very, very solid support down below where the market's trading. So even if we do see another strong bear candle, we may not see the market test down to 1084 in a hurry. In terms of the band charts, and here we see very strong negative activity down below the lower band, and this really does confirm the strong bearish bias in the medium-term time frame with the bearish breakout, the strong bearish follow-through. Any attempted rally is likely now to find very strong resistance at the lower band, trading at 1139 at the moment. Next to NYMEX oil futures, and strong buying in this market today, a very large white body candle, and for the previous 3 consecutive days the market was finding resistance at 46.72. We also had the Kijun-sen trading around that area at 46.75, and the market was testing up just through there and constantly being rejected, but not being rejected in a major way, and that's what was important following that very strong bull candle here, where we saw the market take out the Ichimoku cloud. The attempted retracement from this strong resistance and the Kijun-sen was very weak, and we saw formation of these small body candles, and that has set the market up for what's happened today, for the buyers to come into the market strongly. A strong bullish breakout up above this 46.72 level and above the Kijun-sen has now set the market up in a very strong first, second and third time frame, or a short-term, medium-term and longer-term time frame uptrend, and suggests that we certainly could continue to see this trend move higher. If we do see the trend extend to the upside, looking to resistance to come in once again around the 49.90 area, around that $50 round number level, and that has been a major level in the recent past. So we will be watching that area very, very closely if the trend does continue to the upside. If we do see any selling over the next day or two, the 46.72 previous resistance level may now hold as support, and with the Kijun-sen trading around there, it does suggest that that support may be strong if we do see any selling. Next to wheat futures, and strong white body candle here, although no change of trend, so the trend here is still down, a candle forming a lower high and lower low. Buyers coming into the market as opposed to the sellers from the previous day's trading, so here we have a switch back to the buying that we saw 2 days prior to today's trading. And importantly, however, for the second consecutive day, the Kijun-sen holding a support. The Kijun-sen trades around the 507, 508 level. This rally today, however, has seen resistance coming in at the 510 the 516.50 level, and at the top of the Ichimoku cloud. So solid support down below, solid resistance overhead. Whether we see the market break out to the upside or the downside is debatable, but with the build of momentum here, and that is in line with the previous rallies here with the two white candles, it is suggesting that we could see a breach up through that 516.50 level of resistance. If we do see that, and it would herald a potential bull market in the longer term time frame. If we do see that, there is then potential for the market to trade up to the 526 level of resistance, which has been important resistance in the past. Into the band charts with wheat futures, and no convincing medium-term uptrend bullish bias here at the moment. 3 days ago we saw the market break out above the upper band in a bullish manner. Previously, the upper band had been holding as resistance. We wanted to see strong follow-through to confirm, and then a breach above this swing high, but that didn't occur. The market then tested back to within the bands, and the middle of the bands holding a support. Today we've bounced off there, and we've found resistance around that upper band once again, and we failed to close above there. If we are going to see a bullish bias develop in the medium-term time frame, we want to see a strong bullish breakout, strong bullish follow-through, and then breaching through the swing high to confirm at 531.18. Next to corn futures, and as with wheat futures, we've seen buying coming into this market today and bouncing off this very strong support at 376. 376 has held on multiple occasions in the recent past. It's actually 8 occasions out of probably about 12 trading days. So very, very strong support. By the same token, resistance has come in once again around the bottom of the Ichimoku cloud and the Tenkan-sen indicator and this 381 level. So a market that's attempting to make its mind up, and the question is, will the 381 level of resistance be breached to the upside? With this build of momentum, there is a suggestion we could trade higher, and the switch from a black body to a white body. But by the same token, if the sellers are strong enough, and looking at the rejection from this area above, if the sellers are strong enough, we could see a breach down below 376, but we'd like to see a bearish breakout, strong bearish follow through. Looking at the band chart here with corn futures, and we see the majority of the price activity over the last couple of weeks down in the lower half of the band, whereas in recent times with wheat the price activity is in the upper half, and it does suggest that there is just a slight relative stronger performance of wheat futures to corn futures. Importantly here, the market has been testing around the bottom band as support. It trades at 375.50, and that's going to be an important benchmark moving forward. But here previously we saw a bearish breakout down below and it failed, and the market then rallied to within the bands and found resistance around the middle band, and that's what we've seen for the past 3 consecutive days as well, the middle band holding as resistance. And this is a way that we do see the market transition into those strong downtrending bearish bias phases. Importantly, we do need to see the bottom band breached in a bearish manner with bearish follow through, and potentially we'd like to see that swing low around 372 breached as well. If that is breached in a bearish manner, we could see strong development to the downside. Next to the US 30-year bond futures, and here an important development today, the market breaching down through the Ichimoku cloud and closing down below there in a strong bearish manner. It suggests that the market is potentially going to transition into a strong bear phase in that longer term time frame, and as you know, I like to see some strong follow through to confirm, and there is an important barrier to that, and that's the support at 154.27. Even though we have a strong build of momentum, we haven't closed down below there, so that is our benchmark for the next day's trading. At the moment we are seeing some buying coming in off this 154.27 level. The likelihood of the market trading significantly higher is not great. We do have strong resistance at the bottom of the Ichimoku cloud that may come into play, 155.09, so we will be watching that, and we could see some strong price rejection from there, but a lot depends on how the market reacts around 154.27. A strong bearish close down below there would potentially suggest that we could see the market eventually trading down to 153.11, but would also confirm the strong bear bias in that longer term time frame by trading down below the Ichimoku cloud. Next to the hourly charts with the S&P 500 futures, and here we saw the market open for today's session up above each of the Ichimoku indicators and the middle pivot point level. The market attempted to rally, but then sold off and was hugging the Tenkan-sen, holding that area as a resistance as it moved lower. Late in the trading day, we eventually broke out with some strong follow-through and tested through to the first pivot point resistance level, 2110. The market failed to break out through there, and at the moment, towards the end of the session, we have seen something of a weak retracement, but the Tenkan-sen is now continuing to hold as support, as is the middle pivot point level, and with the Kijun-sen just below there, around that round number 2100, we are likely to see some strong support coming in around this region. If we do see a strong bull candle, we could easily see the market test to the first pivot point resistance level, 2112, and then possibly to the second around 2121. Any selling, strong selling down through the Kijun-sen and through these other indicators could see the market easily test down to the first pivot point support level, 2091, and that would also entail a breach through that round number 2100 level of support. Down below that first level, we have the second at 2079, and if the market is going to reach through there, it would mean testing through the Ichimoku cloud. So that scenario is not as great as the market at least finding some support at the first level or bouncing off the area that we are trading at now and continuing to the upside.